Welcome to Investors Insights. Our topic today is dark clouds and silver linings. As we start this vlog, we first want to say that our thoughts and prayers are with those who are struggling and dealing with Hurricane Irma. We also are thinking of those in Texas that are still recovering from Hurricane Harvey. And on the 16th anniversary of 9/11, our thoughts and prayers are also with those who died, whose families have suffered, and for those who have served in this country and died while serving as well to protect this nation and the freedoms that we believe in. And we want everyone to know that our values and prayers and thoughts are with you in each and every way. So on that note, gentlemen, if someone turns on the news, they get a lot of doom and gloom. And let's talk about that. I think, Bobby, last week as Hurricane Irma was approaching, we had clients. In fact, we have clients in Florida and Texas that we're thinking about. But we also had clients calling in talking about what's the ramification of Hurricane Harvey and Hurricane Irma. Talk a little bit about that.
Yeah, we want to address some of the client concerns there. So obviously Harvey in Texas, big impact on Houston, which is a big center of commerce. And then Irma going through the spine of Florida. So short-term volatility we expect due to job loss, lower productivity.
Right.
Longer term, it's actually the replacement and rebuilding will actually boost economic growth. And so based on some historical numbers, you had Hurricane Andrew, the market was up 10% a year later. And then Hurricane Katrina the market was up 6% a year later. So we're watching the economic impact, but we're staying the course.
Okay. All right. And also, you had some interesting facts as to what's taking place. Trey, talk a little bit more about that.
You want to talk about dark clouds. We see them in Texas and Florida, but they're definitely there in D.C. as well, kind of figuratively. Last week, Donald Trump and the Democrats came to a good agreement about pushing the debt ceiling and the funding of the country out to the end of the year, which has a lot of positive. It kind of clears the deck that we were really worried about some issues. We got great hurricane relief, which was great, but it made for two really big scenarios. Scenario one is we now have to the end of the year to get tax reform. So if Congress and Republicans realize that, they may speed that up,
right,
which would be great for the market, great for the economy. That would provide some relief and some boost economically. We'd see the market rally. And so if the Republicans realize that, they may speed things up. Then the second scenario is they don't realize that. And then starting at the beginning of the year, now they've got to redo the debt ceiling, they've got to redo funding the government, and then that pushes tax reform off to the second quarter instead of the first quarter of 2018, or maybe even further, which would be really rocky for the market.
So a combination of what you just said, along with what Bobby was talking about, economics and politics, could cause us more volatility as we go on in to the remainder of this year, which is over in less than 4 months. And Ashley, from the standpoint, you brought up something that we're looking at down the road.
Yes.
Something that's on the horizon, a topic regarding Janet Yellen. Talk to us about that.
That's correct. We had mentioned this to you on the vlog 3-4 weeks ago, and we're watching very carefully in February because that's when Fed Chairwoman Yellen's term is up.
Correct.
What's interesting about that, we also told you on the vlog, we're watching that because she's been a high regulation chairwoman. Right. That's important. What we're looking at now is that Stanley Fischer, who is a major ally of hers, is now retiring in October, right. So that's significant.
Right.
The other thing that is significant is the smart money, as it were, if she were going to be replaced, was on Gary Cohn. However, now, because he was critical of Trump on Charlottesville, probably not. So we're watching that very carefully for next February.
Yeah, because that'll be a topic of discussion and how that can impact things.
Yeah, it makes for an open field, which is, again, very uncertainty, very high volatility.
Right.
Which a few weeks ago we probably didn't have. It's probably more certain.
No, you're right. And there's a lot of this information that is going back and forth. The media is communicating it as well. What you need to know, though, is corporate earnings continue to do well. And if corporate earnings are doing well, that shows that corporate America is moving forward with new products and innovation, and that's a positive for your portfolio and the stock market. So on that note, there's going to be volatility, ups and downs, but we're going to keep you posted and updated. You also need to know that you can follow us on Facebook, Twitter, LinkedIn, as well as we're going to continue our one-on-one discussions and communications in a variety of ways. We hope you have a great week and know that our thoughts and prayers again are with everyone as we get through this week, and we hope that 2017 ends on a very positive note.